All right, guys, we are going to have ourselves a nice little Twitter space or X space meeting tonight. We're going to start off with this passage from the William O'Neill, How to Make Money in Stocks. And it's about how to use relative price strength correctly. And I think it's very important because we use relative strength in almost everything. We like to see it over 89. We like to see 90 and above. And this is how to use relative strength correctly. So many fundamental secret analysis think the technical analysis means buying those stocks with the strongest relative price strength. Others think that technical research refers only to buying of high momentum stocks. Both views are incorrect. It's not enough just to buy stocks that show the highest relative price strength on some list of best performers. You should buy stocks that are performing better than the general market just as they are beginning to emerge from sound base building periods. The time to sell is when the stocks have advanced rapidly, as extended materially forms its base and is showing extreme high relative price strength. To recognize the difference, you have to use daily or weekly charts. So you guys, I don't think I'm teaching you guys anything new here. I always use daily and weekly charts. And I wanted to bring up this relative strength because when I look for leaders, your leaders are going to be somewhere in the 90s, okay? And if they aren't in the 90s, they've formed a base big enough where when they do take off, the strength there is going to be very outperforming. So that's why we keep an eye on what was relatively strong and the bases that they're forming as well. And this is one that I wanted to show everybody because I think a lot of people, if you're sleeping under a rock, gold is pretty damn strong. And another one too, that has been on the rise here are these insurance brokers. And there's two distinctive insurance brokers I kind of wanted to go over with tonight. And if you guys have, do you guys have any, maybe a deeper understanding with this or not? I asked my wife to see if she ever heard of any one of these. So I don't know. If you guys know of either one of these that I'm going to read about, just chime in, let me know. But Root is one of those. Root is one of those companies. You guys know I talked about this yearly basing, this yellow line at 86.50. I said, I want to take this. I was sleeping on this, guys. I was sleeping on this. It's absolutely ridiculous. You guys know it. You've heard me cry about it a bunch. But ROOT, I'm just getting my ass kicked by this thing. Right at that 86.50, obviously, I didn't take the basing breakout. And look at this, guys. Even if you took half after all-time high, your other half would get brought up to break even. You would still be in this stock according to my rule set. It's amazing. It's a huge mover. And here we are back at this basing top again. Now, I just wanted to go over this because the relative strength on this is over that 90. We're looking at 98%. Well, everything else in the market is failing. Like if you look, the S&P 500, look at how far this has pulled back. 20% is a bear market. We're at 9.87 right now from its top. People are afraid. People are very, very afraid. So when I see something like a Root that is strong, I see a flight to safety, or into gold, I see a flight to safety, but is it worth playing? So that's the real question. Is it worth playing? Because if the market keeps going down, even these things that are relatively strong holding up can pull back too. So I just want to get my feet wet. Just put in enough where if I do lose, it's very, very small. Because if I can get a small piece in while it's holding, while it's carrying strength, I think these have an opportunity as well to go much higher if we do see a follow-through day after this rally attempt. So this is just something I'm looking at. This is it's definitely something that I'm willing to get in small in, but these are the things that I'm looking at. So here's Root. I'm going to read a little bit about it, and then I want to like compare another company to it, because another company, EVER, looks very similar with a nice cup and handle, but I read this earlier and I found that they're two distinctly different companies, and this is the reason why. So let's look over EVER and then we'll read about them. So EVER, big cup with a handle formation on the daily time frame, 93 RS rating, so still very strong, above a 10-day moving average and starting to show new higher lows here. We have one new higher low currently. Still could use some time, I would say 3 or 4 more days to really tighten up on this pattern here. But all in all, I like these numbers down here, big numbers for EPS and sales growth. Very nice. Let's read about them now. So they are labeled as technology service, internet software services. They obviously have this beautiful gradually increase on earnings, the rise in earnings here. Looks really nice. You can see this nice gradual increase. And so let me get down to the good stuff here. So EverQuote Incorporated operates as an online insurance marketplace, connecting customers with insurance providers. It offers car, home, and life insurance. The firm's data and technology platform matches and connects consumers seeking to purchase insurance with relevant options from its broad, direct network of insurance providers. The company was founded by Seth N., David B., and Thomas in August 1st, 2008, headquarters in Cambridge, Missouri. Massachusetts, I'm sorry. So that's EVER. So what I got from this is they're an insurance connection where they take customers and they bring them to the insurance agency. So that's what they do, and they probably make a cut off of that. Now this is Root. This is the first one I showed you. New higher lows. I believe that this is the leader currently. I have a few other ones in here like Bro. Bro is another one. This could be considered a leader as well. I would say this is more of a consistent leader, where Root is more of the a newer company. You can see where it came from in 2020. So it already had a hard start. They're coming in right at COVID. So anyway, long story short, guys, they got good numbers here. Things are looking nice. Newer IPO anyway, relative speaking. And you can see the RS rating 98, beautiful, high, tight trend. It could be a lot tighter. It's a little sloppy up here, so I shouldn't say high and tight, but high flag here. And looking for a breakout, looking for that breakout there. So let's look for what Root is. So they're labeled as finance or insurance broker services. Now listen to the difference here. And they have a gradual incline on all the charts here. So Root Incorporated is a technology insurance company which engages in the provisions of insurance services. It offers mobile telematics and technology platforms to segment individual risk-based and complex behavioral data and customer experience to make pricing decisions and grow business. It provides insurance products and services in the United States. The company was founded by Alexander Tim and Daniels Manges on February 2015, and is headquarters in Columbus, Ohio. Okay, so this is a huge difference here with the two companies, because EVER is connecting two different people. They're the technology behind it, trying to connect people, probably using some form of AI in order to increase their expansion, where Root, on the other hand, ROOT, is actually providing that insurance service. So there's the two distinctions there that I found. Both are doing very, very well. So that space in general, the insurance space, is looking really, really well. So, the other one with this was Bros. I'm not Bros, but BRO, Bro. So this is in the same space. And this is under finance, insurance, broker services. You can see they had a gradual decline from Q1 to Q4, but compared to previous Q1, that's what you want to compare it to, if their earnings goes as estimated, which it looks like they do fare on the side of their estimations, Bro will do better than its previous Q1, which that's what they're banking on. That's what's being forecast. So beautiful uptrend here. This has been going on since last year, March of last year. It's been on this uptrend. So still kicking ass, still taking names. But this is just part of that insurance area. Let me read about Bro, B-R-O. Brown & Brown Incorporated is an insurance agency, wholesale brokerage, insurance program, and service organization. It engages in the provisions of insurance brokerage services and casualty insurance underwriting services. It operates through the following segments: retail, national programs, wholesale brokerage, and services. The retail segment receives fees in lieu of commissions. The national program segment acts as managing general agents and provision professional liability and related packaged products for certain professionals. A range of insurance products for individuals, flood coverage, and targeted products. So yada yada yada. So yeah, they're doing the same thing as EVER. They're just making it sound a lot more fancy. They did a really good job making it sound really, really fancy. And they have a little bit more under here, but we're not gonna dive too deep. We know Bros is doing well. We know it's one of the leaders, but all in all, it's the insurance. It's the insurance, the online insurance, the programming behind bringing customers in with the insurance. And so yeah, so those are some of the things I was looking at. Also, gold. Gold's another big one. Let me see.
Can you look at the ETF for insurance?
For insurance, that's a good one. Do you know the ETF? Insurance
it's
ETF?
KIE.
Thank you very much for that. I need to add that. So it's above its 50-day, but not doing nearly as well as you would think. Now compared to all the other ETFs, yes, I mean it's doing well. It's above its 50, but you wouldn't expect this. Now you can see clear as day. You can see that resistance area right there, but you also can see new higher lows. Here's your low. Here's your new higher low. New higher low. This could be your new higher low here. And if that is, then look at, this is price action, guys. This is getting really tight. This is getting really tight. You know what happens? After expansion, you get contraction. After contraction, you get expansion. Now, which way we get this expansion, I don't know. But I say we leave this chart just like I have it, just like this. We'll come back to you, KIE. But yeah, thank you for that ETF. That's definitely something we need to add to our ETFs. I'll definitely add that. As for gold, so I like to use GLD. This is your Spider's Gold to see how gold's doing. So GLD to me, we've talked about gold many times. If you guys remember, I called this area out a long time ago. We also talked about this area right here being a base, these new higher lows and getting tight. Another beautiful long push here. Held new higher lows, held, breaking all-time highs, moved up higher once again. Now what's it doing here? It's creating new higher lows once again, and it has another basing top. So if we just look at this, probably not do that. If we just look at this, the very first thing I see is this basing top, or you can look at this like this. Oops, not like that. Don't look at that. Something like this. You know, you got your new higher lows right here. You got one here. You got one here. I could see this thing kind of selling off and making another new higher low. You know, some people only go by 2 new higher lows. I love to see 3. I mean, you know, some of the best breakouts that I've seen are 3 new higher lows. But you know, and there's been plenty of bangers that don't wait for that 3rd new higher low. They just rip, you know. So you know, but keep an eye on gold. You know, gold has had some runs. This could be considered its 3rd run, if you consider this one here. But definitely 3 legs up. This would be 1. Here's 2. This would be its 3rd leg here. So I would definitely just be careful with this. Just be careful. But with that, knowing where gold's at and on its ETF, just like we did for KIE, a few stocks. We have AU. I believe this is a slower moving stock. This one's 3.6. But you guys can see you got like a cup and handle type pattern. But right here, I just like the new higher lows. I like the new higher lows here. It's starting to get tight. If it can break above this, you know, that could work out. But it's trending. You can see it's trending higher. And if it can break out of this area, that would look really nice. The weekly time frame, maybe we shouldn't look at the weekly time frame. Yuck. Look at that. Constantly trending down here. Look at this. That's not something I want to be a part of. That's not something I want to be a part of. So scratch that. Let's take a look at DRD. That's another one I had on my watch list here. So look at this. When we zoom out here and we look at this weekly time frame, well, actually that kind of looks good because it's breaking out. It looks like it's breaking out. Yeah, this actually looks pretty nice. Let me just go back and look at AU and make sure my chart wasn't all. Yeah, see, it's still, it's not breaking out yet. It's nothing I want to mess with. Yeah, I just want to make sure I wasn't looking at the chart wrong. So here's DRD on the weekly, but you guys look at this. It just constantly is getting sold off. So just know what you're investing in when you look at something like this. Obviously, you can see it right here in the EPS. Garbage. Garbage, doo-doo, flaming hot garbage, alert. But this is why I'm attracted to it here, right here. Bada bing, bada boom. You know, know what you're getting yourself involved in here, folks. But we do have a breakout right here in DRD on gold. I did talk about that today, actually, about it coming back up through here. But all in all, I don't want to be a part of something like this. I'd rather be a part of something like Root. Look at the numbers on Root. Look at these numbers on Root. New higher lows, relative strength. Things are looking good, baby, good. But I just want to say, we want to know what's hot. You want to know what I'm looking at? These are the things I'm looking at, and right now they're garbage. It's still garbage out there. The only thing I like is Root and Ever and Bro. You know.
I have one for you.
Yeah, tell me. And another thing too, before we just start doing a bunch of different tickers, what are you guys seeing strength in other places that I'm not, that I haven't brought up? So I brought up gold and internet retail. Is there something else big that's standing out that you guys are seeing? Like, is XLV doing pretty good? Let's see.
I feel like real estate is going to be one that's trying to get itself together. It's not quite there yet, but I think if interest rates start to really look like they're going to come down, that real estate's going to really take off.
Okay. I'm trying to remember which one real estate is. XLRE. There we go. Yeah, I mean, and real estate's trending too. You know, you can see these 3 new higher lows on this is the weekly too. You know, so it's at an area of support. I definitely could see that heading higher.
And that's going to bring up the ticker that I have. It's COM as in Mary, P as in Paul.
COM?
And this is similar to EverQuote. Same kind of idea as EverQuote.
Okay.
They're acting as a platform to promote whatever industry they're promoting.
Contract, a broad commodity index that considers 12 different commodity future contracts in the agriculture, energy, and metals sector. Is this the right one? COM? I'm sorry.
Got to add a P as in Paul.
COMP. I'm sorry. You know, I do want to just bring up COM for a second, though. That was very interesting. Did you see the flag on that bitch? I mean, that's like 1, 2, 3, 4 years of a flag. So if that thing started breaking out, that might be really nice. Holy cow. But it moves 0.6%. So ain't going to mess with it. So here's your compass, COMP compass. Let's read a little bit about compass. Let's see, online real estate platform. Its platform provides an integrated suite of software for customer relationship management, marketing, client services, operations, and other critical functionality, as well as brokerage services and adjacent services. The company was founded by Ori Alan and Robert Refkin in 2012 and is headquarters in New York, New York. So COMP is relatively new. You can see March 2021 is when they had liftoff there, and you can see they're getting this nice rounded bottom. And whatever you want, however you want to look at these, the way I make it easy for myself is here's a bottom, right? Obviously a double bottom at $1.81. Now it's creating these new higher lows, right? And you can clearly see the new higher lows. It's right here on the weekly time frame. The weekly is showing you those new higher lows. The daily, you can see them too. You're going to see the same new higher lows. It's just easier to see on the weekly, you know? And now look at this. You have this huge push up on volume. So I need to bring this up on my other chart. I just like looking at the volume on this end. But big volume, yeah, big volume coming in right here. Big volume right here. Why? Earnings. They had earnings, okay? Earnings was the day before. And, oh, they got a nice website. This is the website here. So so they're like a Zoom or a Zillow or whatever the hell that name is. But yeah, so they got a cool website. Right here, we're buying this one. We're buying this house, people. This is where the next meetup's going to be. Right here.
Trap house.
Trap house. But I like it. I like this. Look how, there's, look at this. How pretty is that? And then look at right here, you have your new higher lows. I mean, you've had your new higher lows, really, but you can see it right here. Look at this. Boom, boom. Yeah, I'm going to have to set my alert on that too. So this whole sector, guys, this whole sector is just mean. It's nasty. Like, it's doing so good compared to the rest of the market. And, I really don't know. I feel like it is, like I said earlier, I feel like it's a flight to safety. What do you think? Do you think that this is a flight to safety, or do you think if the market starts to head much higher after this, do you think these stocks will continue to go higher? What do you think?
Yeah, real estate is one of the investors' favorite areas. The only reason it hasn't done well the last 4 years is because of COVID and interest rates.
Okay.
Once those interest rates come back down, real estate's going to take off like crazy.
Okay.
It's very, very sensitive to interest rates.
It makes sense. Yep, and I guess with things coming down the way they are, interest rates, they're going to be forced to slash, and I wonder, one thing I didn't look at is after the data that came in today, if the CME Fed tool changed. So right now, 98% chance still in March, but I think June was the nearest cut, and now it's a 58% chance that we're going to get a 0.25% cut. So now we're for sure getting one in June rather than July. In July, it looks like we have a 35% chance of coming down another quarter. So pretty it's the rate cuts are coming in quick. Which, and what about the VIX? I'm telling you, my buddy, the old guy that I know, he always says, we're waiting until it hits. I think he said 36 was his, 36 is his number. When VIX gets to that 36 number, he goes, that's when I'm buying everything. was like, oh, wow, you know? So a lot of interesting things going on. One thing I will note though, and if you guys have a ticker you want me to take a look at, please, because I find good ones, and between myself and Stewie and Dan Bob and well all you guys, Yosef, you guys always post good tickers. I'm not gonna find all the tickers. I can't. You know what I mean? I just can't. So I really do depend on you guys, and I appreciate you guys really bringing to the table the tickers that that I love. Those can slim tickers, those things that meet the criterion that we can make money on, that have relative strength. Momentum leaders. So I appreciate you guys. And if you guys have any or anything that we should take a look at, like COMP, let me know, because this is nice. This whole sector, I need to add that too. Yeah, there we go. Ta-da! Any other tickers, guys? Oh, now we're not talking. I see how you are. Come on, Beef. I know you got something. Oh, you know what? His speaker sucks right now. His internet sucks. Come on, give me something, Beef.
SSRM.
Oh, yeah. Let's take a peeky gander, shall we? Oh, yeah. Look at that. So this is mining. I think this is, gold. We talked about this once before. And that's the thing with gold, too. Now, miners are give and take, and you got to know what you're getting into. When you see a stock and it can do this, you have to understand that's a scary point in time, that a stock that you're in can do this or this. So know what you're getting into, first of all. But this is high and tight, and it's looking really, really clean. You can chart this very, very simply. You could say it's breaking out, just like I was saying. What is it? DRD. DRD broke out right here. Same thing. Gold is breaking out. It looks like it is breaking out. So if you haven't got a piece of it, make sure you find proper risk management when you're playing this stuff. Yeah. I don't know. I think you guys were in the chat with me this morning when we were talking about the overall market and stuff. But yeah, until the market comes around and shows support, we can't trust much of anything. So if you're going to take a trade, it needs to be for good reason and on smaller share size. It really, really does. You can't keep yourself from trading. I mean, you can. Trust me, you can. But if you made good money in a bull market, it's okay to stick some feelers out there. As a trader, it's okay. But you have to have a plan and understand what you're doing. And so I see a rally day here. Now, as Dan brought up, it's not the prettiest looking rally. Well, he didn't. He was questioning, and I answered. I replied, it's not the prettiest rally, but we'll take it. Like it's this looks like shit. You got 3 red candles down here. The bounce here was on not very high volume, but it doesn't matter. A rally day does not have to be on higher volume. When we're looking for higher volume is that first follow through day, that FTD, follow through day. We want the FTD, baby. After 4 to 8 days, give or take, 4 to 8 days, we want to see higher than average volume push us up through, and sustain, create a new higher low. And that is our first sign where we can actually start putting some money into the market. It's not go full bore. It's not buy everything that you ever wanted. That is when it's like, hey, we can start to slowly become risk on. And that's what we're waiting for. And you guys have been with me. I have been there for every single follow through day. We have called out the rallies. We've called out the follow through days almost every single time here. And now that we've seen a couple of cycles, haven't we? We've been together long enough. We're actually seeing these market cycles, and it's easy to point them out. because we know what bear markets look like now. We know what follow through days are. We know what rally attempts are. We know all the stuff. We know not to touch anything below a 200-day moving average, and that's where we're at. It's scary, you know. And I'm always positive. I'm always confident. But until I get that follow through day, I'm not going to get my hand smacked again. I'm not going to reach into that cookie jar. And if I do, it's only going to be a pinky, you know. So just keep that in mind, guys. We are in a scary place, but we do have a rally day. Now we need that follow through day, and we're gonna. I mean, trust me. If you're with us, we're going to talk about the follow through day. We're going to talk about what's strong, what we've been watching. Because if you can be patient, this is where you make the most money right here, by not giving in to your temptations and your weakness of trying to buy shit that you don't need to own, because nothing is strong here except for the very few things that we brought up. And even then, you know, they're relatively strong, a lot of them, because they're just trading sideways. So keep that in mind. You guys have anything you want to bring up? This is an open mic, baby. Jimmy Bright.
What's the rule for? I'm sorry. Go ahead, Jimmy.
I put him on blast. I don't think he actually said anything.
Oh, okay. I was wanting to know what percentage volume does it have to be the follow through day?
Higher than average. So I think what is it? Do they use, I think everybody's different. Either a 20, I think I have mine set for a 20-day average volume. But that's a good question. It's got to be a higher than average. So if, I guess it depends on what you're taking the average over. But I would assume 20 days, 30 days, you're roughly going to get the same average, I would assume. But you want to see higher than average. It doesn't have to be higher than the previous days. It has to be higher than average, to my best knowledge. So correct me if I am wrong.
I have it here somewhere on Facebook. I'm trying to find it.
I know you do. Swing Trader Strategies, baby. That's home base right there. Swing Trader Strategies. Find us on Facebook.
I sent you the directions on how to go live too, by the way,
Okay, perfect.
on Discord.
We'll try that. We'll try that on maybe next Wednesday if you want.
Unless you want to try it real quick now.
Well, we can give it a shot.
Looks easy.
All right.